What's going on, guys? So today I'm back with another audio blog. I'm going to go over a Q&A session I did about 2 or 3 months ago. Just going to review those questions quickly and talk about some of that. So the first question is asking what populates my screens, basically what my setup is. And first off, I want to talk about that big screen in the middle there. That is a Dell 4K 43-inch multi-client monitor. And they're a little pricey. It's about $1,000, but it is by far the best piece of trading equipment I've ever purchased, hands down. The thing is just absolutely fantastic. I highly recommend it if you've got a bunch of smaller monitors cluttering your desk. This thing replaces 4 to 6 of them pretty seamlessly. And if you buy 2 of these, you're pretty much completely set. You don't really need anything else. I run 8 separate virtual screens on mine. But basically, how mine is set up is about 50% of it is charts. I use DOS and E-Trade for charting, DOS for executions, and I use Sterling for executions as well through another broker. But I don't really like Sterling's charts at all. I don't have any Sterling charts anywhere on my screen. I use that simply for executions. So again, charts and montages take up about 50% of that screen. And the rest is separated out into a bunch of other little windows. In the bottom right-hand corner there, I have a little Word document. I keep tabs on companies that I'm watching and little things that I don't want to forget about. I have down there in the corner, up in the top left there, you can see Twitter. And then all the windows on the bottom there, I have one is for research. So I have like SEC.gov and Yahoo Finance and FinViz tabs up on that where I'm doing research. I have another window with my email, and then the remaining space down there in the bottom left is taken up by 2 private chat rooms that I'm in. But that's pretty much it. And then I have 2 peripheral monitors there on each side. You can get an idea just how big that Dell monitor is. If you look to the right of it there, you see the Mac desktop. That's a full-size Mac desktop, and it's not exactly small. They're not small, and that thing just looks, completely dwarfed next to this Dell monitor. It's huge, but it's great. Again, I highly recommend investing in one of those. If you've got the money and you're looking for something new, that's definitely the way to go. So then on the 2 monitors on either side, one I have Investors Underground, and on the other one I have E-Trade up with a couple more charts. Typically I watch about 8 charts. I don't like to watch too much stuff. I find it distracting. Typically during the day, I'm only focused on 2 or 3 names. I don't need a ton of charts up, but I have 8 up typically. I use E-Trade for level 2. They have a complete book for free, which is nice. And I like their charts as well. E-Trade is just what I learned to chart on originally when I first started out, so I'm just kind of used to it. So I just never changed. So that's pretty much what my main setup looks like. And then I have 4 laptops as well. Don't ask. I have 3 MacBook Pros and a PC laptop. That's kind of my mobile setup. I don't really have mobile monitors. If I'm trading on the go, typically I'll just take a whole bunch of laptops with me. Maybe not the best way to do it, but that's just how I do it. So yeah, that's pretty much it. That's what my main setup looks like. Next question is asking to speak on trading emotions and trying to get out of a trading slump. Listen, we're all human. Everyone tells you that you want to trade without emotions, but unless you're paper trading or a robot or not human, it's just not going to happen. It's an unrealistic expectation to think you can trade without emotion. That said, this is really an internal struggle, unfortunately. This isn't really a question that anyone else can answer for you. People ask me about this all the time, like I'm really struggling with discipline, or I just keep closing my trades too early and taking profit. How do I fix this? And I really wish I had better answers to this question, but it's so tough. I tweeted something out a couple weeks back as well in regards to this. And basically what I said was, nobody is inside your own head but you. I have no idea who you are, what you're like, what your risk tolerance is, your personality, your flaws, your strengths, your weaknesses, your account size. I don't know anything about you, right? So how could I possibly advise you on what's best to do for you, right? This question is not something you'll find the answer to anywhere on Twitter, or from somebody else. This is kind of an answer that you have to work through yourself, and you find it, you come to a conclusion here just through trial and error, experimentation, through trusting yourself, and most importantly, just through time. Trading and getting screen time, it's just something you're going to have to struggle through in the beginning. Everybody does. It's not fun, but you have to do it. You absolutely have to do it. So again, I wish I could give a better answer here, but it's just not possible to create a generic, overall correct, quote unquote, response to this question. Everybody arrives at this answer from a different angle, and really the ones who have it truly figured out, nobody taught it to them. Again, this stuff all comes from within. And I really do believe that the only solution for this is time. The longer you trade, the more screen time you have, the more crazy things you see, the more you just become used to it and adapt. Just like any job. If you have a full-time job currently, think about how scared you were, how nervous you were on day one when you didn't really know anything or anyone. It's daunting, and it brings out certain emotions in you because it's all new and unknown. But now that you've been at your job, for a year, 2 years, 10 years, whatever, you don't even think about it anymore, right? You just kind of go in, there's no emotion, you just kind of do it because you're used to it. But again, the only way to arrive at that solution is through time. And trading is no different. So controlling trading emotions is by far the hardest part of this game, no doubt about it. There's just no simple solution to it, just time. If you go back through some of my old posts, I talk about emotions a lot and can give some insight for you onto how I handled mine. Trading emotions are never something you master. You just get better at dealing with them and managing them, but they never go away. In regards to a trading slump, I would say this. Don't get discouraged over a bad day or even a bad week. Someone put it to me this way. They said, red days happen, brush them off. Red weeks happen. You have to brush those off too. It's a little harder, but it happens. And if you start to see red months, then there's a problem. That's an issue, and you need to do some serious revision to your process. But again, red days, one bad day, one bad week, you have to just put it in the rear view. The worst thing you can do is let a trading slump get to your head. Most importantly, you can't try and get it all back at once. Revenge trading just absolutely just digs the hole deeper. This is a huge problem of mine at the beginning of my career, and it's just something that you're going to need to stop doing. You need to have an extremely short memory, show up each morning with a clean slate, and no matter how good or how bad the prior day was, each day is new. You have to approach it with a completely clean slate, fresh mindset. I don't really pay any attention to like trading streaks or any of that stuff. It's not important. It doesn't matter. Each day is its own, and the only focus should be on doing your job that day. One day at a time. You can't be looking ahead or looking back. That's just when you get yourself in trouble. Okay, next question. Brokers. Somebody just wanted me to talk about brokers. Okay. Currently, I have 4 accounts. I trade at Centerpoint via Vision. I have Cobra Trading via Wedbush. I have an E-Trade account and a Charles Schwab account as well. I do a majority of my day trading at Vision, at Centerpoint Vision, as they have the best short locates around, bar none. They have the instant locate monitor, which is nice. Actually, Cobra just got one too, so that's good. And they offer DOS as well, which is my preferred weapon of choice. So I'd say probably 75% of my trading happens at Centerpoint Vision, and the other 25% I'm doing at Cobra. Cobra is great for their overnight policy. They have no fees on holding stocks overnight, which is awesome compared to Vision, which is 4 times the borrow fee to hold overnight. That kind of sucks, especially when you start using size. That can really add up. So swinging at Vision is really a no-no. So you need either Cobra or E-Trade, Interactive Brokers, Speed Trader, something like that. If you do a lot of swinging. So no swings at Vision is the main point there. Unless I can't get the borrow at Wedbush and I absolutely have to, I'll avoid that at all costs. Up until recently, Cobra did not have instant locates. The way you locate via Cobra is through AOL Instant Messenger, which is not ideal, but at the end of the day, it's not the end of the world either. The 2 guys who source locates for you over there are very helpful. They're timely in their responses, and typically, I would say the entire process to get a borrow via AIM through Cobra probably takes about 2 to 4 minutes total on average. That can be a big deal if there's some random intraday runner and time is of the essence. But really, that really comes into play. So it's not really a big deal. And I use Sterling through Cobra as well. And I simply use Sterling just for the montage and executions. I don't use their charts at all, like I mentioned earlier. And the other thing I like about Sterling is if you have a limit order out and you need to move your order quickly, you can just kind of right click, and they have a little feature where you just right click on your order and the little box pops up where you can change your order up or down by either a penny, 2 pennies, or 5 cents. And you can change and replace orders very quickly. So that's one of my favorite things about Sterling. That's much better than DOS. And DOS, you can change your order, but it's a little bit more time consuming and not as convenient. In that sense, Sterling has a big one up there. But I like DOS's charts a lot better. And that's one of the main things that I use. And then my other 2 accounts, E-Trade. I actually don't have any money in my E-Trade account right now. I just use E-Trade for charting. I use the E-Trade Pro software for level 2 and charting. They have a full level 2 book, which is great. But I will be loading money into that account soon, as they're a good swing trading option as well. And then I have a Charles Schwab account open for all my long-term stuff. I have 2 IRAs. My traditional and my Roth IRAs are in Charles Schwab. If you want trading to be a full-time profession and you don't have an IRA, you need to fix that. You need to open an IRA. As traders, sure, we have the freedom, and tons of perks, working for ourselves, no boss, no hours. But the one downside is that there's no benefits, right? So you need to take care of yourself. You have to start putting money away in an IRA, in a few solid dividend-paying names, preferably. For example, in my main IRA, I have AT&T, Bank of America, General Electric, Verizon, Disney, and Walmart are the names I hold in there, and all those companies pay a good dividend, pretty much between 3 and 5%, which is way better than you'll get at any bank or any CD or anything like that. So you really need to set up an IRA as soon as possible if you don't have one. Your future self will thank you handsomely, down the road. They'll be very glad that you did that. Next question, the rough part about profitability. Getting there is, it's rough. You're going to feel like absolute crap early on. There's just no way around it. You feel like an idiot. You feel like you can't do this, like all hope is lost. I wrote an entire blog post dedicated to this topic as well. I'll actually do that one on an audio blog next. It's called An Open Letter to Aspiring Traders, What You're Actually Getting Into and How to Prevail. It's the name of the blog post. If you haven't read it, just sit tight, and I'll have that one on audio as well soon. But I really think it takes a very special type of person to remain vigilant and motivated through the rough times of early, your early trading career. This is another question where I really wish I had a better answer, but it's not something that words can fix or solve, really. This is a personal attribute that comes from within, and everyone reaches this destination in a different way. It's completely dependent on the type of person you are. It really is. There's a reason that more than 9 out of 10 people who try their hand at this game fall flat on their face. It's difficult, straight up. It takes an unbelievable amount of guts, determination, and resilience to push through early on. I say it all the time, the more money you have, the easier trading gets, without a doubt. This is also why I discourage anyone with an account, really under $5,000 to just don't trade at all. Save up your money. If I'm being completely honest, anything under, really 30,000 is really not enough in my opinion. You can open a small account, once or twice just to get a feel for what it's like with real money. It's very, very difficult to build an account from a very small amount of money. This game is hard enough as it is. So don't make it any harder by trying to come from nothing. The furus who sell you pipe dreams of turning $500 into hundreds of thousands, it's disgusting. It's absolutely disgusting. It's not right. It's not realistic. It's not true. I don't know how they sleep at night. They prey on people's hopes and dreams, and take money from these people who are damn near broke to begin with and desperate for a lifeline. And it really makes me absolutely sick. Can it happen? Sure, it can happen. People have turned $2,000 into 6 figures and whatnot, but it's very, very, very rare. Very rare. And you shouldn't expect that outcome. It's probably not going to happen for you. And it's really best to save up and trade, when you have a nice healthy bankroll. Next question. 1 second. Curious what you personally want to see from your trading that let you have enough confidence to start putting on size. Okay, so when did I start sizing up, and what type of consistency you personally wanted to see before sizing up, win percentage, winners, losers. Okay. What I wanted to see from my trading before sizing up. I'm not sure there's like a switch flip moment where one day I was not comfortable with size and the next day I was. It's kind of like a gradual process that blends into itself. There's really no moment where one day you're not and then the next day you are. So I wouldn't try to approach it like that or think about it like that. First and foremost, prove to yourself that you can stay green for at least a couple of months straight. 3 or 4 months of profitability, that should suffice. Once you've done that and you're building up a little, capital cushion, then you can start thinking about sizing up a little bit. Say a normal position size for you is 1,000 shares, and you now want to size up. Don't just double your size immediately. That's just going to mess with your head and have you being an emotional wreck. You need to start small. So my approach was, say I was taking 1,000 shares. I would put it on, and then 2 or 3 minutes later, I would just add 200 or 300 more shares. That's not a lot. It's not going to change a whole lot. It's not going to bankrupt you to do that, but it's just a little bit more than what you're used to. So slowly get used to doing that. Try that for a week, and if that's going well, then then you put your 1,000 shares on. A few minutes later, add 200, 300. And a few minutes later, do it again. Now you have 1,500, 1,600 shares, and just get used to that. That's the way I did it, nice and slow. It's just a slow, continual process at your discretion, all while remaining fairly comfortable, of course. You should feel slightly uneasy as well while you're doing this. A little discomfort is good. That means you're pushing yourself and you're making progress. You don't want to just be 100% complacent, because then you're probably not going anywhere. You're probably just treading water. So again, there's no today I'm trading small and tomorrow I'm sizing in. Again, it's a very slow and gradual process if you want to do it correctly and not blow up. Otherwise, you'll likely do more harm than good if you try and just jump in and make it happen immediately. In regards to the second part of that question about the numbers, I don't think about any of that stuff. I'm not a numbers guy at all in that way. For a more detailed explanation on that, I have another post that I'll also get to in the audio blogs. I'll talk about that more in the future. But basically, I think a hyper focus on numbers like win percentage and that stuff just hurts your confidence, when you're already struggling. It's just a distraction. You need to take it one day at a time. Don't worry about little nitpick details and numbers and streaks or whatnot. Just focus on trading well one day at a time. That's the best advice I have for that. It really will go a long way. How do you bounce back from a downturn, keeping positive? Bouncing back from a loss, what an important part of the game this is. This is absolutely massive, super, super important. I just explained this in a recent blog post, which again, I'll talk about soon. I suggest reading that. But specifically to answer your question, you can scroll down towards the end of bullet point number 2. It's called Intensive Indifference. I will leave a link to that blog underneath this video where you can go find that. But I want you to specifically read about intensive indifference is the part of the blog that I want you to read. And again, I'll link that below. Thoughts on a potential market crash and what would cause it? I have no idea. Nobody knows how or when the next market crash is going to come. People have been calling for it for over 10 years now. The market just continues to go straight up. So your guess is as good as mine when the next crash is coming. Even right now, all the North Korea stuff, we're basically on the verge of nuclear war. And the market just does not give a shit. It just continues to go higher. So I don't speculate when it comes to that stuff. I have no idea when or if the next crash is coming. I just prefer to trade the action that's in front of me one day at a time. A couple more questions from this post, but again, I'm just referencing other blog posts to answer them. That about covers it for now. Again, I will do a follow-up to this one. I will audio blog all the recent and relevant posts that go attached to this one. But for now, I think that's going to be it. So I hope you guys enjoyed it. And again, I'll leave some links under this post, the other relevant blogs to go along with this. And I'll be back soon with another audio post. All right, talk soon.